Should I invest in the market right now? I mean, I don't really know if it's safe and the stock market crashes all the time. Should I
I just
buy
get really
bonds? I
nervous
mean,
when
I've
I
heard
think
that
about
bonds
pay
stocks
you
going up
pay
and
I heard
down
that
like
crypto
that.
is the
And
new
I'm
thing.
just
Now,
I'm
I've
really
really
nervous
invested
about
in
that
it,
whole
and
thing.
I
So
know
I don't
basically
know if I should
like
invest in it.
I'll
Some
just put
people
it in my
might, and I'm just
investment
not sure.
account for a year, and I'll appreciate it.
If I had more hair, I'd pull it out. Hi, my name is Alex, and we're about to make this whole investing thing a whole lot simpler. Let's go. There's so many choices in the investment universe. There's so many ways that we could spend or invest our money. So, how do we figure out what the best thing to do is? Well, let's simplify that with a few different principles I'm going to go over right now. In 1943, there was a psychologist named Abraham Maslow, and he created this theory of human motivation. Basically, why do people do what they do? And he came up with this famous visual called the pyramid, Maslow's hierarchy of needs. And at the bottom of the pyramid, you have things like your physiological needs. You and I, we need to eat, we need to sleep, we need to drink, stuff like that. Further on up the pyramid, you have things like love and self esteem. We all want to feel some kind of connection with other people. And then at the very tippy top of the pyramid is self actualization. You and I have things we want to do in our lives. We have dreams, we have goals, we have all these things we want to achieve. But the main principle that I get from Maslow's hierarchy of needs is that you've got to start at the bottom of the pyramid first before you work your way up to the top. I started thinking to myself, why don't we take this same principle and apply it to investing? Because that would make things so much easier. So at the bottom of the investing period, you have cash. Cash is the best asset to have, especially during times of crisis. You need cash to do things. Before you can even think about investing, you need money. Money can create more money, but if you don't have money to begin with, you can't create the money. So you kind of need that, right? There's a ton of YouTube videos and blog articles and podcasts out there that say what you should do with your next $1,000, as if that $1,000 was going to change your life in some massive, incredible way. But the reality is, it's probably not. I hate to break it to you, but you probably will need more money invested, especially over a period of time, if you want to see outsized results. Now, I'm not trying to put anybody down or belittle anyone's circumstance. I'm just trying to be real and say that if you want a net worth of $1 million 10 years from now, $1,000 isn't going to cut it. And that's where the cash comes in. So start with cash. Second on the level of the pyramid in the investor's hierarchy of needs are what I call utility assets. These are things that you and I can buy that will make our physical and emotional lives better. Things like shelter, things like food, things like transportation. These are the nuts and bolts of daily modern life. And the way that we get those things is by first accomplishing the first level, which is getting cash. Now, utility assets are great to have, but they're probably not going to grow that much. They'll usually grow at the rate of inflation or not at all. For example, a house, if you buy a house, it'll probably keep pace with inflation. But if you buy a car, it's going to depreciate over time. Just make sure you're able to use some of your cash in order to buy or rent some of these utility assets. The next level of the pyramid are what I call quality traditional assets. These are the things like stocks or bonds, or maybe rental real estate, or buying a private business, or building a private business on your own. The great thing about this level of the pyramid is you can go from not a lot of money in invested assets to $1 million or more in a reasonable period of time. For example, if you look at the stock market, since 1971, it's returned almost 12% compounded annually. So if you were willing to wait 50 years, you would only have had to set aside $30 per month in traditional quality assets such as stocks in the stock market in order to get to $1 million. Now that's a long time to wait, of course. If you want to get there in 20 years, you could have invested $1,100 per month and achieved the same result much faster. This level is where a lot of investors put their focus, and rightly so, because these are growth assets. But make sure you don't make the mistake of trying to start at this level before you've taken care of the basics, such as having cash in the bank and making sure that you have your utility assets like your food, your transportation, and your shelter. Now, at the tippy top of the pyramid are what I call IES, and that acronym stands for illiquid, exotic, and speculative. What does that mean? Illiquid means it's hard to sell or it's hard to make money off of it. For example, I have some collectible coins that I own, and those coins, yeah, I could sell them, but I couldn't sell them as easily as, say, some stocks that I have in a brokerage account. I would just go to my app, click sell, and they would be sold as long as the market is open. For coins, I would have to go get them evaluated. I have to go to a dealer or a coin broker and then sell them. So they're not as liquid, meaning you can't trade them as easily. Exotic assets might be something like patent rights that you buy from an inventor, or a vacation rental that you buy in Brazil or something like that. Like, these are not traditional investment vehicles, but they are investment vehicles nonetheless that people use to make money. And then there's also speculative assets, things like, in my opinion, cryptocurrency. That whole asset class is speculative to me. It just doesn't have a long term track record. So, if you want to invest in this level, make sure you've hit the other levels first because you want to build a strong financial base for your future. There's a reason that a lot of asset managers that invest in these kinds of vehicles don't advertise to the general public. It's because they want investors who are quote unquote accredited. And accredited is actually a specific definition that means that you already have a net worth of $1 million or more, and or you make an income of at least $200,000 a year and are expected to continue making that level of income in the next year. There is some logic behind this because there are countless stories of people who have invested all of their life savings into investments that they didn't understand, or they didn't understand the risks, and they ended up getting wiped out when they would have been much better served sticking with more traditional assets that they understood more thoroughly, that were probably going to give them a more reliable return. And look, I'm not giving you financial advice. I'm just telling you my opinion as far as how I think you should approach thinking about prioritizing your investments. Just understand that there's different levels here. It's not just any investment is equal to any other investment. There's different hierarchies depending on what you're trying to do and where you're at in your financial life. If this was helpful or valuable to you, it would mean a lot to me if you just go ahead and just show me some love, tap that like button, and subscribe if you enjoy this content. And I have so many other videos planned for you. It's just crazy. Make sure that you check the channel again for more videos soon. I'm releasing 2 every single week, so make sure you come back for more. All right, thanks. Bye.